Hey everybody, we're well into the start of 2022. We're still in the first quarter. I've got a lot of people asking me what's happening with the markets right now. So I thought I'd give a very quick snapshot overview of the way I see things. I look at things a little bit more statistically. One of my previous lives, I was a financial planner. So money over time graph is quite an easy way to do it. Obviously with share markets, you have bull markets, balance markets and bear markets. Kind of similar as using it for an analogy with real estate. There are some differences and some similarities, but I'm using that very briefly. With real estate, obviously it's always driven on supply and demand, and like it is with share markets in some ways too. But with real estate, what happened with good old COVID was it actually increased demand again when everyone thought the markets were going to balance out. They didn't. It actually took off again. We had a lot more people coming back to New Zealand. Now we're starting to see it balance out again. We're starting to see fewer people at open homes and more properties available on the market, which gives people more choice. So I think if you were looking at a graph, we're probably about here. We don't know whether this point to this point is 12 months, 18 months, 2 years, you don't know. But obviously as markets balance, it's not so much as bearish with real estate as it is with stock markets, but there will be a bit of a drop away with some properties in the future at some stage, because as things change, people need to sell their homes quicker and there's some greater motivations. We don't want to get into that detail right now because that's not so much important. It's just giving you an understanding where I see the market for the next 12 months. So I don't see the massive jumps in property values that we have done in the last couple of years. Obviously markets have been jumping sort of 25-30% comfortably in a lot of the markets in the last couple of years. And so what we're seeing now is it's going to start to balance out. What that means is that also in a balanced market, we will have a longer time on market, because in this part, that's also what I call a bridge market in real estate, because banks are more interested in bridging because they see your home selling quickly. The risk ratio for them is low because they know you're going to sell your home, so they're happy to bridge and secure against your property. As the market starts to get tighter, banks aren't so keen to bridge, which means there are less unconditional offers coming onto houses. And when you get that situation, you get a lot more conditional offers, whether they're subject to finance, subject to a house sale, etc. And so a home may well be under offer as quickly as they were prior, but they have conditions, so they're not sold straight away. So in that case, what happens is when you've had an average sale of say 18 days on the market, it may well stretch out to 30, 40, 50 days because you've got a condition to a house sale and you're waiting for their home to sell. It can take a little bit longer. And then again, same thing again off that house. So you may have a house that's on the market, quote unquote, for 3 months, but it's actually sold in 3 weeks. But it's that domino effect. And I think we are going to see a bit more of that sneaking into the market this year. If you want to know more, obviously give me a call. I don't want to go into it in too much detail here, but more than happy to catch up, have a cup of coffee, give us a call, Brent 027 737 8587, as you know, and we can have a chat. Look forward to catching up soon.